Well, hey, we're doing it a little later this week, but that's okay. And, well, I've gotten so many emails, John, about cryptocurrencies, or as I like to refer to a number of them, kleptocurrencies. And there's so much confusion. There's so little known by most people. Yeah, I mean, guys like Andy Hoffman and others who we've had on, they know a lot about it. But, it's evolving quickly. One thing you probably read is that they're going to have futures and options on Bitcoin, on cryptocurrencies, and there probably will, as a result of that, be an ETF coming up. But we're going to start from the beginning. First of all, I guess you have to start with the question, John, what is a cryptocurrency?
Yeah, cryptocurrencies are really the culmination of a lot of work that's been done since really the 1980s on creating some kind of cyber cash. In other words, as soon as we had the inklings of the internet, people started thinking, well, let's just create a money that operates on the internet instead of the physical world. And, there was eCash way back when, and then eGold, and James Turk, who founded Gold Money, got a lot of patents on what was effectively a cryptocurrency back in the day, but they never really worked for various reasons. So it was only with the creation of Bitcoin a few years back that a real functioning cryptocurrency hit the market. And to say it's been well received is really an understatement. People love the idea of being able to transfer value instantly and to completely bypass the old banking, government, central bank network. And so cryptocurrencies are exploding now. And for a couple of reasons. One is that there are inherent limitations on the supply of, for instance, Bitcoin built into the algorithm that generates new Bitcoin. It can only grow at a certain rate, and then it's capped at a certain number of outstanding Bitcoins in the end. And that, in theory, gives it a stable value because its supply can't be created in infinite quantities the way today's fiat currencies can.
And are. And are being created, right?
That are being created. Yeah. I mean, we're inflating away the world's fiat currencies at an accelerating rate, where we're clearly on a path to destroy the dollar and the euro and the yen. And people who are paying attention get that, which makes cryptocurrencies look even more interesting because, again, in theory, their supplies are limited, which makes them really attractive compared to a currency like the US dollar, where the supply is expanding at an exponential rate, and it's government policy to devalue the currency a little bit year after year after year. And at the rate that we're taking on debt, that rate of depreciation in the dollar is going to have to increase dramatically to avoid a gigantic crash out there somewhere in the future. People see that. So they look at something like Bitcoin and see something that doesn't have that problem, and that also operates much more cleanly than the banking system. You want to transfer money overseas today via the banking system, and you've got to jump through a lot of hoops, and you've got to wait for a while, and you've got to pay a lot of fees. Well, with Bitcoin, it's instantaneous. You just click send, and the money goes, and it's accounted for via something called the blockchain ledger in a way that's secure and also instantaneous. So in a lot of ways, cryptocurrencies are just a much slicker, high-tech, better version of today's currencies. And that's part of why they're gaining such traction now. But there are a lot of questions still outstanding about how it's going to work going forward. And among those questions are the fact that Bitcoin itself has a limitation on its eventual supply. But there are some workarounds or some loopholes where you can just split Bitcoin into two currencies, and then you've got two of them, both of which are going to increase in supply, but both of them have limitations on the ultimate supply. But still, you've doubled the effective supply of the currency by splitting them in two. You can also bring out new currencies. There are things called initial coin offerings, where you just create some new version of Bitcoin that has a few tweaks and maybe is better for some specific use than generic Bitcoin is. And you release it to the public the way we used to release tech stocks in the 1990s. And everybody buys them. They're a lot of them aren't doing too well, but in the aggregate, a lot of new money is flowing into ICOs. And that's increasing the total supply of cryptocurrencies out there. So Bitcoin itself, is growing slowly and will be capped at a certain number of Bitcoins someday in the future. But the total amount of cryptocurrency out there is exploding right now, which means there's a question about inflation in this sector, depending on how you look at it. Yeah, Bitcoin itself can only grow to a certain point, but the amount of cryptocurrency, if you're looking at the concept generically, can grow exponentially, and it is growing exponentially. So is that a form of inflation? Is the fact that the total value of cryptocurrencies is going up relative to the dollar and to real stuff out there, basically an asset bubble that is inflationary in the same way that the stock and bond and real estate bubbles are? Or is it a completely different animal? Is this a kind of currency that is basically pushing the fiat currencies of the world off the field and replacing them? And I think that remains to be seen. We don't know how this is going to play out necessarily because it's a brand new concept. And we also don't know how governments are going to react to the the implied threat of cryptocurrencies coming along and making the dollar and the yen and the euro look old-fashioned and low-tech and not really worth the trouble.
Right.
Governments are going to respond to this at some point in a pretty aggressive way. China has already banned Bitcoin exchanges, for instance, and other countries are looking at various kinds of regulation and various definitions. For instance, in the U.S., Bitcoin is defined as an asset, which means there are tax consequences for every transaction. And we could easily see things like that spread around the world. And it's not clear how this affects cryptocurrency values going forward. So there are a lot of question marks right now,
right?
As there always are early in the emergence of some new entity in the financial ecosystem. What was going to become of Amazon, for instance, 15 years ago? Were governments going to step in and force them to charge taxes on their transactions, which that's now happening, and it hasn't really slowed them down? Or were they going to regulate e-commerce in some way that would favor bricks and mortar retailers who still have political clout in a lot of jurisdictions? That didn't happen. Amazon basically took over. Right. And it could well be that cryptocurrencies do the same thing, or it could be governments find some way to slow down or inhibit their growth. We made gold ownership illegal in the U.S. back in the 1930s, which pretty much limited gold's role in the monetary system for the average person. They could do the same thing with cryptocurrencies. We just don't know.
Yeah, we don't know.
So there are so many unanswered questions right now, but it's a fascinating concept, and it's a really interesting thing to watch happen.
Right. So we don't know, but we do know that there's over 2,000 cryptocurrencies out there right now. Only a handful of them really appear to have a future, like Litecoin, Bitcoin, Ethereum, maybe Ripple. I don't know. There's a bunch of them, but probably 6 of them, maybe at the most, have a potential future. What about the blockchain? That really is what all these cryptocurrencies are, that they hinge upon, and that is really the technological breakthrough. How does the blockchain work, John?
Well, I won't try to go into any kind of detail about how the blockchain works because, frankly, I don't understand it. But it's a much more sophisticated, stable, fast way of managing transfer of value, which means you can use it for all kinds of things. The banking system is looking at blockchain now to replace a lot of their internal accounting systems. And you've got every major market entities there looking at using blockchain to replace the way they do business now. It's going to be a big deal in apparently the energy markets and certainly in banking and lots of other things. So the blockchain might end up being a bigger deal than Bitcoin. Again, this is one of those things that'll play out in ways possibly that a lot of people don't understand right now because it's brand new. You can't know how a new technological breakthrough is going to spread and how it's going to change the world precisely because it's brand new. So exactly. I think that a lot of things will be done via the blockchain a decade from now. And I think it will improve the functioning of the global economy in a lot of fundamental ways. At least that's the sense that you get from the interest that a lot of major sectors and big companies are showing in blockchain technology. So it could well be that there will be some blockchain startups that end up being bigger and more consequential than Bitcoin or Ethereum. we can't know that going forward.
Well,
but it's one possible scenario for this to play out.
Yeah, basically, as Wikipedia and the others define it, it facilitates secure online transactions, is a decentralized and distributed digital ledger that is used to record transaction across many computers so that the record can't be altered retroactively, and therefore there's no collusion, and the transactions are recorded in perpetuity, and any transaction that's ever happened in Bitcoin, in theory at least, you can go back and scrutinize the chain and see, and that's what gives it its integrity. And that's why stock exchanges will switch to Bitcoin eventually, because it will make the inevitability of not being able to settle transactions. A certain percentage of transactions that happen on a stock market every day are basically scrapped or unable to be reconciled. With the Bitcoin, that's gone. And that's a big thing. So the blockchain, like you said, John, is really perhaps the biggest innovation. So we've been talking about Bitcoin, John, being a currency or money, but we got to go look at what is money, the classical definition. And number one, it's a medium of exchange. Number two, it's a store of value. Number three, you've got universal acceptance. Number four, durability. Number five, portability. Number six, divisibility. Does Bitcoin and other cryptocurrencies at the present time actually fall into the definition of money, John?
Maybe. Actually, Kerry, let's go back even a little further and talk about why there's money. Why do we need it?
Good point. Yes.
Yeah, because every human society has started out doing barter, right? You have some beaver pelts, but you need some arrowheads. So you go find the arrowhead guy and you work out a deal where he gets your beaver pelts and you get his arrowheads, which works just fine when you've got like 10 things in total in your economy, right? But as soon as you get sophisticated and complex, it doesn't work anymore to barter, right? If you're a speech therapist and you need pork chops, then the butcher had better have a lisp or something,
or you're
not going to get pork chops.
Or his children's got to have a speech impediment.
Yeah, exactly. And so every society at some point in the past has come up with something to be a generally agreed upon medium of exchange and store of value. We originally, in a lot of cases, used some really weird stuff as we were trying to figure out what works as money. Seashells and rocks and bales of tea leaves and human slaves and goats. And, all of these things have been used as money in the past. But eventually, societies settled on pieces of metal because they can be made identical and they're fairly rare, especially in the case of gold and silver. And that was our money for a long time. And it worked beautifully because the supply was limited. So gold and silver coins held their value come what may. And then governments started to chafe at the limitations that a money supply with a limited value, a limited supply placed on them. So they scrapped the precious metals idea and went to pure paper. In 1971, the world went to pure fiat currencies, where governments just got to decide how much money there was in the system, and we had to trust them. Well, they've broken that trust really dramatically, as you would expect. And that's leading to all the debt-based pathologies that we're seeing right now. So along comes cryptocurrencies, which are basically private sector forms of money that are created when people, in effect, do math problems on computers, but can only be created in a limited quantity. So it's possible that this process of limiting the amount of new cryptocurrency that is in the market gives cryptocurrencies a decisive advantage over today's fiat currencies, and that they can operate as money. Right now, Bitcoin, for instance, is more of an asset. You buy it because you think it's going to go up in value. You don't buy it so you can buy dinner at the local restaurant. It's not used as some places accept it, but not that many yet. So it's not really a currency in the sense that you spend it freely on whatever you're doing, because you can't do that yet with Bitcoin or any other cryptocurrency. So the question becomes, will the acceptance of cryptocurrency spread to the point where you treat it as money, where you have a debit card in effect or an online account that you use to buy stuff like a PayPal account, right? Or a Visa card. And if we reach that point, then we'll say, sure, it's totally a currency, just like the dollar and the euro and the yen. We can't say that right now. You can say that it's an asset that's going up in value dramatically lately, and that someday you might be able to easily convert into real stuff. Right now, you've got to go through a two-step process. If you want to convert your Bitcoin into real stuff, you got to convert it first into dollars, let's say, and then use those dollars to buy stuff. So that's a later stage in this process when everybody accepts Bitcoin just the way they accept dollars. And then it's a currency that you spend alongside whatever other currency you use.
Yeah, I want to go over something called Gresham's Law, because I think we are in the midst of Gresham's Law right now, John, with cryptocurrencies, particularly Bitcoin, and that is that bad money pushes out good money. So in other words, when you have paper and then you've got gold or silver, you'll use the paper because the paper really isn't worth anything. The gold and silver potentially could be going up in value. Right now, if you look at Bitcoin, it went up 55% last month. In the month of October, John, who is going to use a Bitcoin to purchase anything when next week it could be up 100%? Is that the kind of thing that you really want to use to be acquiring goods and services? You're going to opt for the fiat currency because you know the value of that is probably going down, or at best, we can hope that it'll be stable and only lose a couple percent a year. So Gresham's Law is a very real concern in the world of cryptocurrencies, isn't it?
Well, yeah, that's part of the process right now. That why would you convert your Bitcoin into a pizza? There's that story of a guy who bought a pizza with 30 Bitcoin or something like that back in the day, and he would have had $15 million if he'd just kept the Bitcoin. So it was a very expensive pizza. People are looking at it that way in a lot of cases, but eventually the supply of cryptocurrencies in general, or maybe just Bitcoin in particular, will reach a point where the value starts to stabilize. It can't go up forever. It's not going to go up to infinity. And when it stabilizes, then maybe you think of spending it. And at that point, if a lot of different places accept Bitcoin, or somebody comes along with an instant translation system where you use your Bitcoin to buy something, and somewhere in the process, it's converted into dollars and then spent, but you don't have to do any of the footwork, then you might start spending your cryptocurrencies just as you spend your other currencies. We'll see about that. The supply of cryptocurrencies in totality, in the aggregate, that supply is soaring right now. So we could reach the point where either there's a flight to quality, as is happening now, where Bitcoin goes up relative to the other cryptocurrencies, and then you might want to spend those other cryptocurrencies, or you start looking at cryptocurrencies as a single entity, in which case Bitcoin's value won't continue to increase as the supply soars, and you'll want to spend it then too. We can't know exactly how this is going to play out, but there is a point out there, if cryptocurrencies are allowed to continue on their current course, where it makes sense to, at a minimum, diversify your portfolio by selling some of these incredibly appreciated cryptocurrencies, in effect, selling by buying stuff with them. And at that point, you get a new ecosystem where there are all these private sector currencies operating as mediums of exchange alongside the fiat currencies of the world. And that's a very interesting place. That's kind of the libertarian utopia, right? Of private sector money competing with government money on a level playing field.
Very true. And
government money having to adapt to a competitive marketplace. In other words, having to behave. The central banks can't just inflate away their currencies anymore because people have options. That might be out there somewhere. And that's the positive scenario in all of this, that we reach a point where everybody has choice and there's competition in the monetary market, and that imposes discipline on governments. I like that idea. I don't think we're going to get there smoothly, because why would governments give up the power, the almost complete power, to create as much new money as they want to? That's the ultimate power in today's world. That ranks right up there with nuclear weapons. And no government will give that up voluntarily. So we've got a lot of twists and turns on the way to that libertarian ideal of a world of competing forms of money in the private and public sector.
Well, it's an interesting phenomena, and really, until Bitcoin's value stabilizes, how can it possibly become a medium of exchange? So we go back to what is money again, and medium of exchange, store of value, universally accepted, either by statute or by consent. Right now, the currency of the U.S. and all the fiat currencies, you have legal tender laws which state that you have to accept this currency for debts, private and public. All debts private and public, which means the government takes it for taxes. So you can't go bring two cows down to the IRS and say, hey, I'm paying you for 2017's taxes, have fun, have some filet mignon, serve it at the White House. You can't do that. So you got durability, like gold. It never goes away. Silver, you could argue, as a monetary metal, doesn't go away, but as a industrial metal, it is consumed. You've got portability, so you can put those greenbacks in your pocket and go down to the 7-Eleven and buy some lousy, you could buy a double gulp soda, a big gulp soda, until they've been outlawed, right? And then you've got divisibility, so the dollar can be split into 4 quarters or 10 dimes, etc. And all of those factors, are they all really present with cryptocurrencies at this point, John?
Not yet. That's part of the journey. They'll if they're allowed to continue on the present course, they'll achieve a lot of the things you just mentioned. For instance, Japan is looking like it's intending to make Bitcoin legal tender. It's making it legal to use it for a lot of different kinds of payments. And if other countries adopt that strategy, at some point we'll see these cryptocurrencies, or at least the best of them, operating, in a parallel way with fiat currencies. But again, that's to be determined. And then you get to the question of what role gold and silver might play in a blockchain world. And I think that's really interesting too, because it's possible that you end up with a system that combines cryptocurrencies as the wealth transfer mechanism and gold and silver as the base money that, as you said, doesn't go anywhere. Gold will sit there for 10,000 years in a vault, and then you go back and look at it, and it's still nice and shiny. It's completely inert. And that's a really, really crucial aspect of money. It's got to be durable, and its supply has to be limited. And gold fits that profile better than anything else that's ever been discovered or created. So a system in which gold is your base money, that's your asset that is stored in a super safe vault somewhere and is not going to be robbed. It's not going anywhere. And then in some way you link a cryptocurrency via a blockchain mechanism and use that to spend your wealth. And then the ownership of the gold in the vault is just transferred. It doesn't move. Somebody else just owns part of your former stash when you spend it. That's a really attractive idea too, because you're dealing with something in gold where the supply grows by 1 or 2% a year, and that's it, which limits the increase in the money supply to more or less the increase in human populations, which means the value of your currency is stable for long periods of time. During the classical gold standard, we went 200 years with effectively no inflation. In fact, there was a little bit of deflation year after year, which is to say your savings held their value. Compare that with today, where if you put money in the bank, the government in effect confiscates a little bit of that money year after year after year until you've got nothing left 100 years hence. So the stable money scenario is a lot more favorable for capital formation and for saving, and a lot less favorable for borrowing and doing frivolous stuff with your money. So it's a better world. And there's a chance that we could go back to that thanks to cryptocurrencies. If they give us the wealth transfer mechanism, the medium of exchange that allows gold to become money again, that's a very big deal. And, again, that's from a libertarian standpoint, that's a really hopeful future. And it's becoming more and more possible all the time. You've got gold money out there partnering or now accepting Bitcoin. Mm-hmm. With the apparent idea of creating some kind of a hybrid private sector money system. That's really interesting. and I'm
really.
sure ideas like that are being tried in other places, and we'll see some releases of gold or silver / cryptocurrency hybrids that I think, governments willing, if the governments let it happen, will give us a much better monetary system 20 years from now than we have today.
Absolutely. Yeah. Well, it's an interesting phenomena. It's interesting to see the way it's growing, and universal acceptance is kind of next on the to-do list of cryptocurrencies. So then we get to the question of practicality. How do you use it? What's the deal with exchanges? Are your cryptocurrencies safe on an exchange? And what about wallets? Can you just elaborate on that?
Yeah. That's possibly the Achilles heel of cryptocurrencies and everything that happens online, is that it can be hacked, right? It's already happened that some major Bitcoin exchanges have been hacked and collapsed, so that, you bought Bitcoin, it's going up in value, but the place you're keeping it ceases to exist. So it's like having, in the old days before FDIC insurance, having the bank where you have your savings be robbed, and you lose that money, and the bank fails and you're out everything. So we're in that situation right now. And I'm not sure what the solution is, because that if governments are threatened by cryptocurrencies, that they're looking for ways to hack the system. In other words, to interfere with the operation of the blockchain in some way that either allows governments to monitor every transaction, which completely does away with financial privacy, or to interfere in some way. In other words, to just clean out your Bitcoin wallet, or to intercept transactions and redirect the money to some other source or some other destination. It's not clear that that's not possible. And if it is possible, then obviously governments will abuse that power, because they abuse all powers that they have. So that's a major potential flaw in the positive scenarios that we've been talking about. Is what if the NSA actually loves the idea of cryptocurrencies, because it makes their job of spying on us and manipulating us in general that much easier? So I don't know, again, how this plays out, but I think it's a major risk that you have to consider when you transact online. I mean, same thing with your PayPal account, same thing with your brokerage account. All of these things can be hacked, and the money in there, for that reason, can't be seen as completely secure. I think there's a time out there coming when we take a new look at holding physical money, cash under the mattress, only in the form of gold and silver, because we realize that we can't trust the internet to be a safe place for our finances. Look at Puerto Rico. Their power went down.
Oh my God, yeah.
And nobody's trading Bitcoin in Puerto Rico.
Correct.
And you can't even get your money out of your ATM when that happens. So in a world of cyber war, where Russia and the US and China can all take down each other's power grids, for instance, or interfere with bank transactions, is having all your money accessible via the internet the best idea? I think we're going to find that it's not. I think that we're going to have to go back in a lot of ways to analog life, just because the internet is not as safe as we thought it was for a while there. And the big systems that we depend on also are not as safe. If China can shut down the Midwest's power grid for 3 months, and that's not far-fetched, we can now blow up power generators online, then is your online bank account really the best place for all of your money? Is your Bitcoin wallet really where you want to have a big chunk of your savings? Because it can just disappear. You can wake up in the morning and it's just not there anymore, and you have no idea how to get it back. There's nobody to talk to, and there's nobody that will answer your questions. It's just gone. And that's got to happen, I think, to Americans before we, the Puerto Rican thing is it doesn't resonate with most people. But when it happens to Ohio or something like that, then we'll start thinking it's real. And I think a lot of people are going to say, well, okay, I need some silver coins.
Yeah.
So
insurance policy.
I need to convert my Bitcoin into a physical form, which is happening now. There are storage facilities for Bitcoin hard drives.
Right.
Where you download the code and you take it in physical form on the hard drive and you put it in a vault. So something like that is also possibly going to happen in the future on a wider scale. But of course, that means it's not a medium of exchange anymore, right? If it's stored in a vault physically, then you get to benefit from the increase in its value eventually, but you can't transact in it. So anyhow, the private sector will sort all this out. Markets are going to figure out what the best way to do all this stuff is, but it's a big forest with a lot of trees in it right now. And it's hard to know which one is more important relative to the others until we go through what we have to go through. We need a decade of trial and error and disaster and object lesson out there. And by the time that we've got through a lot of it, we will understand what the best way to use cryptocurrencies will be. And I suspect that it's going to have a big gold and silver component somehow, because the physical storage of money, in other words, the wealth storage part of the equation, is going to be a very big deal as we find out that the internet is not nearly as secure as a lot of people still to this day think it is.
Yeah, as you'd like to believe, obviously. So we kind of touched upon privacy, but the way the blockchain is now, people or entities can track you down and see what you purchased with it, or see that you purchased Bitcoins, whatever. I mean, that's all possible, isn't it?
Yeah, well, apparently. It's not anonymous. By definition, the blockchain is not anonymous because it has a name at either end of the transaction. And presumably, governments can monitor all this. The idea that the NSA can't see where Bitcoins go is probably wishful thinking. I'm sure they can in some way. And if they decide you personally are some kind of threat to them, for instance, if you're speaking out against government policy and they know where your Bitcoin is stored and they can access and bring down, or at least hack, your Bitcoin exchange, then it's no better than having them be able to hack your bank account or your brokerage account, right? Which they can do today if they want to. Yeah. So you make the government mad and your finances just disappear. And that's something out of science fiction. You read a William Gibson book or something like that, like Neuromancer, where you make some big entity mad and these ghostly fingers reach out and just empty all your bank accounts. That's day is coming. So we really have to think in those terms while we're looking at these slick, high-tech new currencies that just seem so great. They seem to solve all the problems of present day and past forms of money. They create new problems at the same time. We have to recognize that your online life is neither private nor safe. And you can't have your finances be primarily online if you want to be able to operate with impunity in the world. If you want to be able to speak out politically and take chances and make enemies of the people in power, you need to protect your finances in a way that no brokerage account, no Bitcoin exchange can do for you. So you need physical money stored in a safe place somewhere at a minimum. And that's where gold and silver and Bitcoin all kind of combine into something really interesting in the future that I think could go a lot of different ways. It could go in a really positive way or it could go in a negative way, but it's coming. We're going to work this out with a lot of big power players involved with differing agendas. And in a decade, we'll kind of sort of know what the new monetary system is going to look like. But right now, you can't say with certainty that it's going to go one way or the other or some completely unexpected way.
Yeah, we're really kind of in Never Never Land. A lot of uncertainty in the space, as well as with traditional government issued fiat currencies. We're really kind of on the precipice, if you will. And a lot's going to depend on whether governments keep allowing it to continue and proliferate. Do you think that the governments are starting to view it as a threat now, John, even though they kind of don't say anything in public about it?
Well, some are and some aren't. Some governments are really accepting. As I mentioned Japan before, see that they're creating a hospitable place for cryptocurrencies. China is the opposite. And I think the U.S. is right now publicly somewhere in between. But it won't be long before they get hostile because cryptocurrencies are a threat to the current banking system. So in a lot of ways, we're approaching kind of sort of a war between Silicon Valley and Wall Street, which is going to be really interesting because in the past, the big banks have basically won all their battles because they're huge and they own such a big chunk of the government and they own such a big chunk of everything else besides the government that they tend to win political and regulatory battles. But Wall Street, Silicon Valley is bigger than Wall Street. You look at the market caps of Amazon, Google, and Apple, they dwarf JP Morgan Chase and Citigroup. And they're ramping up their lobbying efforts in Washington. So they have the power, and they love Bitcoin.
Yeah.
So they have the power to impose their will on Wall Street, or at least possibly. They could win that battle, in which case you'll see the regulatory systems in most big countries become more and more favorable to cryptocurrencies until we get, a hybrid system, and then most everything is done on the blockchain, and these old fiat currencies just kind of fade away. That would be the Silicon Valley victory scenario there. On the other hand, the military-industrial complex probably does not like cryptocurrencies unless they can control them. So for them to allow that transition to a blockchain world would imply that they have a way of monitoring and controlling cryptocurrencies that actually increase their power, increase the power of the NSA and the CIA, et cetera, in ways we wouldn't be happy with if we understood.
Right.
And so you've got some serious power players out there, and they have differing agendas. And it's not clear who wins in the end, whether it's going to be Google or the NSA. And it's not clear which of those is a happier scenario for the average person. So very interesting times, Carrie, very complex. This is right out of a science fiction novel. And maybe more extreme than a lot of science fiction novels. So I'm having a lot of fun watching this from a safe distance and just stacking my silver and gold and assuming that that's probably going to be a safe strategy. But you never know. You can't really know how this is going to play out any more than you could know which .com in 2007 was going to end up being Google and which one was going to end up being pets.com, right? You couldn't know that at the time necessarily because they had comparable market caps and the same number of analysts with sell or buy orders on them and stuff. Same thing today. You just can't know who's going to win this battle, and you can't know how the ecosystem is going to evolve. But from a historical standpoint that we're living through one of the most fascinating, consequential times in human history.
Absolutely. No question. Well, John,